Hey, good morning, options traders. And I thought this would be a perfect time to revisit a candlestick pattern that we looked at back in mid-October called a piercing pattern. And it was forming in one of the charts, and I posted about it and showed a picture and said, let's revisit it at a future date. So the piercing pattern is one of many what are called reversal patterns in the field of candlestick charting. So let's take a look at it. What is a piercing pattern and how did it fare? Now, also for anybody who's interested in the Candlesticks course, I have received a number of requests saying, hey, do you ever give discounts on your courses? So through November 2020, I'm going to do this 20% off the Candlesticks course by using the code CANDLES20. And you can find those courses at optionsatoz.com. So for anybody who's interested in candlesticks, you can now get 20% off through November. So what is a piercing pattern? Well, remember that every single candlestick pattern has a bull and a bear version. That's pretty much true of all technical analysis, because once you understand one, you just flip it over on its head and you get the other. So a bullish piercing pattern starts out with a very long, pronounced downtrend. And this is really true of all of our reversal patterns, that we need to see a strong trend in force. If you see these patterns in a sideways motion, well, we don't really pay attention to it. So the longer and more pronounced the trend, the stronger the signal. So here's the way that it works. We've got this very long downtrend, and then the next day we get usually a red candle, which again reinforces the idea that we're in a downtrend. But then the next day something interesting happens. We get this. We get this green candle, but notice how it formed. The opening trade of the green candle is down here at the bottom. So it looks like the trend was going to continue down. So remember, when we see a green candle, this is the opening trade on the bottom, and this is the close on the top. That's why the candle is green. The closing price is above the open. And we got the opposite over on the red. For the red body, the top of the box is the opening trade and the bottom is the close. So again, you can see we closed down here near the low, and then we opened the next morning even lower. But then something happened during the day. The market started to rally. And what we're looking at for a piercing pattern is that if the closing price, the top of this green box, is above the halfway point of the previous day's candle. So all you need to do is just kind of draw an imaginary line from the center of this previous candle, and then notice that the closing price right here of this green candle is above it. That is a piercing pattern. Now there's a lot of different variations. We could have what are called meeting lines. We could have piercing patterns, engulfing patterns, kicker patterns. They're all similar. But the piercing pattern shows that the trend at least appeared that it was going to continue, but then reverses. And the main reason we want to see it close above the halfway point is it just gives us a pretty good sign of strength. So think about it. Very long, pronounced downtrend. Looks like the trend's going to continue. Next day we gap down. Looks like it's going to continue. But something flips intraday. And that's usually a sign that the market is saying, hey, this is pretty much the bottom. We think it's a better buying opportunity than a selling opportunity. So what you're probably going to see in the near future is for the trend to reverse. And so when you see this piercing pattern at the bottom of a long pronounced downtrend, we call it a bullish piercing because it looks like the market is about to turn to the bullish side. Well, as I mentioned before, if you understand the bullish version, you always understand the bearish. Just the opposite. We're going to see a very long pronounced uptrend. Typically we'll get a green candle to follow, which looks like the trend is in force. Next day we get this. But notice how this formed. The stock had to gap up to get this opening trade, the top of this red box, above the green. So even on the opening trade on this day, it looks like the bullish trend is going to continue, but something flips intraday. And the closing price, the bottom of this red candle, lies below the halfway point of this green one. So remember, to get the red candle, this has to be the opening trade. We draw an imaginary line from the center of this previous day's candle, and the closing trade just pierces that halfway point. That is a bearish piercing because it occurs at the top of a very long pronounced uptrend. And what you're most likely going to see is for the market to reverse. So let's go over to the E-Trade platform and take a look at the chart that we were talking about back in mid-October. So here's the chart. It's on Peloton, ticker PTON. And here's our candlesticks. Let's zoom in. Here's mid-October. So take a look. We're in this very long, nice uptrend. Not only was it an uptrend, but lots of green candles. Markets were opening on a particular price and closing even higher. So even when we got the red candles, they were still, in most cases, higher highs and higher lows. So super strong trend through here, but then look what happened right here. Got this nice big green candle, which looks like the trend's going to continue. Then on this date right here, this is October 16th, 2020, the market gapped up again. That's why the red box sits higher than the previous day's green candle. It looks like the trend was going to continue, but then something flipped intraday. And the bottom of the red box, the closing price, just eclipsed the halfway point of the green candle, previous day's candle. So this is a piercing pattern, and it again shows that the markets are going, hey, you know what? It looks like this is a better price or a better point at which to sell. So if we're running out of buyers up here, what's our best guess? That tomorrow we're going to get even more buyers and continue higher? Or that maybe now sellers are going to start to form? And if we start getting selling pressure in here, what happens? Well, it sets off a whole cycle of what's called a positive feedback loop, and more people jump in to sell. We get stop orders that get triggered. That pushes the prices lower. It pushes more people into selling, and so on and so on. And that's just kind of what happens. The prices just continued to drift lower. Now, in the past few days, we've actually cracked the 50-day moving average. That's another technical indicator that we'll look at. So right now, this is not the time to be buying Peloton. You're right between the 50 and the 100, so you want to kind of watch it. If we continue to fail, we're probably going to come down to the 100, but the time to buy, if you're looking to take a long position, is to wait for it to get above the 50. But back to the story here. What could you do as an options trader? When the market's rallying, this is why you want to roll your positions. And if you don't know what rolling is, there are other videos in this forum on rolling your options and why we do that. But mathematically, you are buying puts. And that's the beauty of it. By parking this cash, we are able to now buy more deltas for the same amount of money. So mathematically, you are buying puts. There's no need to try to sell your calls up here, buy puts, sell your puts down here and flip over to calls. So many traders try to do that and time the markets. Keep your positive deltas up here, but just hedge the position. And if it continues higher, then you've got positive deltas. But if it continues lower, you've got cash, and again, you can end up with more deltas for the same money. So it really puts you in a win-win situation. But the way that we got the signal was to see this piercing pattern at a top. So for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and of course, the Candlesticks course. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.